Everion, everyone pulling the strings money. It's a question that sounds simple, but the answer is surprisingly complex. Let's dive in. Most of us probably think of governments when we think of money. And you're not wrong. Governments, through their treasuries or mints, are responsible for printing the physical cash we use, the coins in your pocket and the bills in your wallet. They literally create this money. But in today's digital world, physical cash is just the tip of the iceberg. It only makes up a tiny fraction, maybe 3 to 8%, of the total money supply in most developed economies. So, where's the rest of the money? That brings us to the big players, central banks and commercial banks. Let's start with central banks, like the Federal Reserve in the United States, the European Central Bank, or the Bank of England. These institutions are often called the banker's bank. They don't deal with you and me directly. Instead, they manage the country's currency, money supply, and interest rates. One of their most powerful tools is setting the base interest rate. This is the rate at which commercial banks can borrow money from the central bank. When this rate goes up or down, it has a ripple effect across the entire economy, influencing everything from your mortgage rate to your car loan. They also engage in something called quantitative easing, which is a fancy way of saying they can create new digital money to buy government bonds and other financial assets. This injects more money into the financial system, aiming to stimulate economic growth. So, central banks have immense power in controlling the overall quantity and cost of money. Now, what about the commercial banks? The banks you use every day, like Chase, HSBC, or your local credit union. This is where things get really interesting. They don't just store your money. They actually create it. How? Through a process called fractional reserve banking. When you deposit, say, $1,000 into your bank account, the bank is required to keep only a small fraction of that deposit in reserve, maybe 10%. The rest, that $900, they can lend out to someone else. Here's the magic part. When they give out that loan, that $900 is deposited into another person's account. And that bank can then lend out a portion of that money, and so on. Through this chain of lending, the initial $1,000 you deposited can multiply into several $1,000s of new money circulating in the economy. This is how the vast majority of money, the digital money, in our bank accounts is created. So, every time a bank approves a loan for a new car, a house, or a business, they are essentially creating new money out of thin air. So, we have governments printing a little bit of physical cash. We have central banks managing the overall financial system and creating digital money to influence the economy. And we have commercial banks creating most of the money we use every day through lending. It's a complex dance between these three major players. But wait, there's a new player entering the stage, you. With the rise of cryptocurrencies like Bitcoin and Ethereum, we're seeing the emergence of decentralized finance. The idea behind many of these cryptocurrencies is to create a monetary system that is uncontrolled by any single government, central bank, or corporation. The rules of the system are set in code and maintained by a distributed network of computers around the world. No single entity can change the rules or arbitrarily create more money. This is a radical departure from the traditional system we've just discussed. Of course, The world of crypto is still very new, volatile, and faces many challenges, including regulation. But it raises a fascinating question for the future. Will money become more decentralized, putting more control into the hands of individuals? Or will the traditional powers find ways to adapt and maintain their control? So, who controls money? The answer isn't one person or one group. It's a distributed system of power shared between governments, powerful central banks, and the vast network of commercial banks. And now, technology is introducing a new, potentially disruptive force into that equation. It's an ongoing story, and how it unfolds will affect all of us. What are your thoughts on all this? Let me know in the comments below. Thanks for watching, and if you found this interesting, don't forget to like and subscribe for more deep dives into the world around us. See you next time.